Hey everyone, it's Evan here from the Trade Risk on Friday, September 29th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. We're going to jump right into the charts here with the S&P 500, still looking at that cash market for that ex-dividend skew in the SPY ETF. And you can see here we had a strong close to finish out the day here on Friday, the week, the month, the quarter, all ending strong at new closing highs here for the S&P 500. You can see 25.16 and change was the close, up 27 basis points on the day. If we go to that weekly chart, you can see we had the super narrow ranged week last week. We basically went nowhere, tried to push up, tried to push lower, and then just kind of closed exactly where we opened. Very narrow ranged week. We dwarfed that this week with a larger sort of range in expansion in size here. We tried to sell off lower at the beginning of the week below 2,500. That failed. We reversed. We went green, and then of course closing strong here at new highs. So this weekly chart still looking as strong as ever. You can see momentum starting to even pick back up here with the 8-period sort of accelerating away from that 20-period rising moving average. And the weekly chart, a point of strength here, both in trend and momentum for the S&P 500. Now, if we go down to that daily chart, today we really got that explosive breakout move to new highs. Last time we spoke on our midweek video update on Wednesday, we had a retest, kind of a failure to close at those new highs here, right above 25.10, but that didn't last long. Thursday had a small gap lower and then finished just marginally in the green. And then, of course, again, accelerating higher and breaking out today on Friday. Once again, momentum picking back up with that 8-period rising, accelerating away from that 20-period, both supporting and below price. So for the bulls, trend, momentum, breadth are all still very much in the bulls' favor right now. That last one, breadth, I have a little bit of divergences that I am spotting based on how I sort of interpret breadth via cycles. So I do have that small gripe there, but overall, the trend, momentum, everything else price action wise is still very much sturdy. And again, when we get into some of the sectors, I still think that is the more interesting story right now to see what's really kind of catapulting this market higher. If we go to the small caps, for example, this is certainly where the very bright spot of the market has not just emerged, but really accelerated to the upside, as you can see here by this candle on Wednesday of this week, as we had this high surge in volume, as we very much cleared to new highs here, expansion in range, and you can see continuing that strength into the end of the week. So a remarkable move. If we zoom out here, you can see from the lows of August down around 134 all the way up to 148. That's about a 10% move in about as straight of a line as you could hope for or wish for if you were long this market. It's been an incredible move in a very short amount of time, and you just need to ask yourself at this point, there is tremendous strength here. There's clearly momentum. There's no strong reason to fight this. Obviously, if you are a reversion type trader, you're probably drooling over this to look for that type of retracement. But of course, we know that momentum, particularly at highs here, can be very much extreme. And there's nothing that says that this can't be 155 closing next week because overbought can beget more sort of overbought conditions. However, again, you need to ask yourself, if you're a tactical short-term trader, if you're trading over the next couple of weeks or so, is this a good spot to buy or a great risk-adjusted entry after a 10% move? Probably not. However, if you're in positions like this, or if you are long the IWM directly, trailing a stop is probably the best thing you can do to continue to ride as far as momentum will take you and stop out when we start to turn south or when it starts to pull back. So a bright spot here for the Russell, hands down, incredible strength in this market. Thinking about your strategy and time frame on whether or not you'd want to, on what you'd want to be doing with this type of market, that is sort of a separate discussion. So keep that in mind. The NASDAQ 100 also finishing very strong here. On Friday, up 72 basis points. So we talked about the cues here quite a bit in Wednesday's video, sort of outline the short trade that I put on this session right here. I still have that trade on. It's basically flirting and teetering right on my stop loss now, effectively 145 to 145.50. This zone is really where I want to see it kind of stall out. Right now, not showing much signs of stalling out. So on basically the way I approach this now from an execution standpoint on our specific process, any green close here on Monday, any further strength on Monday, this will be an exit for a loss on this NASDAQ short, and I will proudly become one of the many who have attempted to short this 2017 bull market and failed. So NASDAQ, I am short this right now, had a nice day to close the week out and quarter out. Higher volume today as well, getting back above some of these fast moving averages. There's quite a bit of horizontal supply right in here. So we failed here many times back in August, and then we're starting to come back into this range here. So let's see how this handles Monday. If we see a green close, I'll be out of this trade on the short side. But for now, sticking with it, it's just basically testing that zone that I want to see it hold under. So the NASDAQ 100, the only index here that's really not making new highs still, right? We get the IWM, which is ripping to new highs, the S&P 500 ripping to new highs. The Qs here still haven't gotten there yet. And again, if you look at the NASDAQ composite, a different story, a much bigger index, 100 names versus 4,000 or whatever the exact number is on the NASDAQ. So keep that in mind, but the Qs specifically failing to get to new highs. So that's the market environment overall. Again, I think we've had a nice run. I think it depends very much on the sectors, which we'll get to later, on where you're positioned and sort of how you're feeling in this market right now. Small caps, tremendous run, lots of momentum still there. S&P 500 new highs. So the bulls very much in control, but I think you need to, again, just be aware and think about if you're entering new exposure now, is that a favorable spot, based on your time frame and strategy, holding period, that type of thing. Let's get into some other markets. TLT. So TLT had a rough week, down 1.14%, back below now for the first time in a couple of months, below the 20-period moving average here on the weekly chart. And you can see rising volume on this sell-off. So sellers kind of firmly back in control. I mean, they did have a small bounce back here on Friday, a little bit of reversal on Thursday. So not signs of completely rolling over, but this gap down on Wednesday was pretty ugly, going back, sort of taking out the lows here from the third week in September and really convincingly getting back below this 8 and 20 period moving average. So not a lot of interest there from my perspective on trying to knife catch this or dip buy this, but we'll have to see what next week brings. I'd say sellers in control, and I would pretty much want to avoid that at this time. USO, more constructive here, up 1.86%, taking out the past 2 weeks highs. If you look at that weekly chart, once again, you can see both the past 2 weeks kind of topped out right around this 1030 level. We broke above it this week. Didn't close quite at the highs, but we still are holding above this 8-period and 20-period rising moving average, which is supporting price. So short-term trend remains higher. Weekly chart, again, in sort of agreement there, and bulls in control. If we go to natural gas, you can see it's still very much floundering here, sideways in between this $6.50, $7 level. Very messy, still carving things out, and looks like a big headache at this point, and would want to wait for some more clarity, say above 680 or back below 640 or so. If we look at the metals next, you can see GLD continuing to sell off here, and this is really starting to get a little beyond what I would consider a very healthy pullback. Again, you could still make the case, especially if you want to throw fibs on here and you want to use the latest and greatest swing from July all the way up to the highs here, you could make a case that 120 or so is the 61.8 if you're going to draw your swing from the start of July to August. So you could say we're at 50%. As long as we hold above 120, that's good enough. That shows at least enough strength kind of holding in there. For me, I would very much rather just see it hold in right about where these August lows are as well. So you can see this 122 level was the ideal. It's starting to break below it, slightly higher volume. So basically would want to turn around there very quick before that gets a little too weak. Silver, kind of the same situation here, pulling back, getting back below this long-term trend line. So a little bit, some caution is advised. Can they turn into sharp reversals early next week and then start to be a good dip opportunity or a good pivot low to trade against? I think so, but again, we'd have to get the evidence for that to actually happen. So that's the metals. That is, I think, commodities. You covered all of that. Let's get into some sectors. It's really the same suspects. So IYT continues to go fairly parabolic here. You can see very much stretching away from the 8 and 20 period moving average. Volume not impressive, but really the transports have tried out for the past few weeks. I don't know how much we want to make of this, but very low volume, but an acceleration higher, new highs, momentum continues to build. Again, you get this straight line effect where if you're not involved in this, do you want to start getting involved in it right now? My guess is probably not, especially if you're a short-term trader. XLI taking a little more time, not as steep of a path here, but still a very nice move from early September. It did some time kind of moving sideways, then tried to get going again here on the end of the week on Friday. So XLI, maybe a little more sort of digestible there, so something that's perhaps a little more attractive from the risk to reward. XLF, you can see here, also fairly parabolic, but this really came after a pretty violent V-shaped washout down here back to start the beginning of September. You can see as it washed out, kind of ran stops, shook out those week longs here, and then really catapulted higher to new highs in that recent TLT collapse. So XLF, I could still, kind of picture this remaining overbought and continuing to squeeze higher here. Again, it has covered some good ground over the past couple of weeks, but kind of 2 days sideways after this gap higher, strong close here on Friday. Moving averages catching up. Got to be careful if you're trying to dip by if you're trying to catch on board of that now, but that washout from early September probably caught a lot of people off guard. Finally, XLE for the leadership sectors continues its march higher. This is nothing new as it broke out from this multi-month range, or this downtrend, not a range, but an actual down channel here, downtrend that it was in. And you can see it continues to march higher, continues to stay bid, and it's holding above that 8-period rising moving average. So XLE continues to remain very strong on the weekly chart. Let's see, we're back above the 8 and 20, and the 8 and 20 is starting to curl back over. We're above this supply over here around $67. So nice sort of resurgence there in energy. So that covers all of the leading sectors there. Those are the sectors that are really keeping this market propped up. They're all fairly, kind of straight line shots. They all look very similar to, the IWM in nature, just basically that parabolic run higher over the past several weeks. On the downside, you have still the lagging sectors here, which are the defensive areas. So it is what you want to see. You get the staples down, still below critical 54.50 support level, which was long-term support. It is now resistance, and it's just hanging out near the lows here. Maybe it's trying to put in some type of stabilization right here at this July pivot, but it's definitely got its work cut out for it to try and reverse. Utilities remaining sort of in this downtrend here. You could see up some higher volume coming in recently, so I don't know if that's capitulative enough to potentially start to get this pivot and a reversal going here. But staples and utilities do look like they could start to put in a little bit of at least a dead cat bounce, and maybe more from there. And finally, healthcare. I've been watching this, waiting for this. I took a position in on the long side here on Friday, looking like this pullback may have finally run its course, getting back above the 8 period and 20 period, a little bit of higher volume there, and again, just clearing above some of these multi-day highs. So XLV outright took that position, or not quite in the XLV, but the leveraged ETF of the XLV, and we're long that, looking to see if this pullback is completed and look for a trade back up towards those recent highs. So that's the recap for this week. Hopefully you guys had a good trading week. I think all in all, I'm a little bit just hesitant on this market right here, given some of the rallies we've seen. I do think the rotation can continue continue this market higher, but I'm very cautious adding new long exposure right now and trying to keep things fairly light. And of course, we'll see how that NASDAQ short turns out. So that's the recap. Thanks so much for watching. Enjoy your weekend, and talk to you again soon.